Real Estate, Home Services Ambassador Real Estate. My name is Mark Wehner, the second team leader here at Champions Real Estate Team. So every Wednesday we jump on here. We're jumping on a little bit earlier today, just kind of how our schedule's aligned and worked itself out. But we try to jump on every Wednesday, give you a rundown what's gone on the market in the last week or so, and kind of what we're thinking. Obviously, we don't have a crystal ball or anything, and trying to time markets is really, really tough. I was watching another video this week about time and interest rates and time and prices and all that kind of good stuff. But we'll jump straight into kind of what we typically do on what the numbers are this week. So we had 362 new listings go live this last week, obviously with Labor Day weekend. That's the lowest number we've had of active listings going live in 1 week since Christmas. I think it was 378 was the next lowest, kind of around in that January. Christmas was like 178, that week or so. But that's typical about this time of year with the holidays. And then contracts written 259 is another low number for that week. So it's one of those things that even though there's holiday weekends, if you're out there looking to buy, that's telling me right there, if it's the lowest number of new contracts written, that you have a pretty good opportunity to get out there, and if there's a house out there that you like that maybe been sitting there for a week or so, 2 weeks, that you can kind of jump on those, and maybe there's not that competition out there. From that perspective. Sold homes, so the new homeowners this last week is pretty steady. About that 450 is kind of what we're seeing typically. So we'll see, in about 45, 60 days, we'll probably see another lower number because we had lower contracts written this week. On typical, the average loan takes about 30 to 45 days to process through that. Sometimes you can speed it up with different variables and appraisals and stuff like that, moving those things up to that sort of it. But look at the big picture. Item of it here as this graphic pulls up. So this graphic is pretty similar to the weeks past. We had just under 2,300 homes, which was similar to last week. Basically, all these numbers are pretty much the same as the previous week. Those houses were coming off the market, not as many came on the market, so we're not going to see a huge jump. Months of inventory similar to that 1.4, up a little bit from 1.3. But some people that number basically represents if no other homes came on the market after today, we would be out of homes in 1 month, 1.5 months roughly. Our average sold price kind of holding steady right now, about that 316 mark, which has been there probably for a little while. It was down a little bit, a couple months ago, and then it's jumped up. But I don't necessarily see, that huge, as we're not seeing those auction prices in those houses with multiple, huge multiple offers on basically every house out there. You're not going to see that huge jump in the average sold price, which we'd seen, at the first half of this year. So as we're going into the second half of the year, I think it's still going to be very strong. I think there's still that pent up demand as supply is still fairly low, but we still have seen a lot of homes come on the market. They just go off very quick. So if they are in good shape, and this is kind of what I see sometimes in this time of the year, you see some of those people that kind of miss the boat of getting their house on the market in the June, May timeframe, and summer catches up with them. They go on vacations and like, oh gosh, we were going to sell our house this summer, and we just kind of never got around to it, which is fine. It's still a great time to get the house on the market, but you have to be realistic in your pricing, and you have to be realistic in the expectations that you may have heard your neighbors talk about, or your friends that have sold this summer. We had X amount of offers, went for X amount above our listing price, because when we do our market analysis, those prices that we're looking at 2 months ago are basically kind of from those multiple offer situations, which we may not get as many multiple offers if we get any multiple offers in our market that we're seeing right now. So we have to price that accordingly. So even if it's at 400, well, that house may be priced at 375 back in April and May, sold for 400. Well, what is that value? And ultimately that buyer is the one that's going to determine that value based on the supply demand and what's out there, because you may have more competition. As you see, we didn't have as many pendings, so we're still having, good inventory out there. So it's the intensity of the market has kind of changed a little bit. I don't think we're seeing a shift in the market, which everyone kind of says, the huge market shift, it's swinging. And, I think we touched on it last week, is that the price appreciation isn't going to be as high. Well, that jump isn't going to be as high, but you're still going to see that appreciation. They say our appreciation's down. Well, that's from the appreciation of those multiple offers going up there. But you're still seeing a very good appreciation in your home over this last couple of years. If you bought a house, I know I just got a house closing on Friday that they bought it 2 years ago, and they came out pretty well for buying a house 2 years ago. Now, and 5 years ago, 6 years ago, you bought a house 2 years prior, you may be just breaking even just happy to get out of the house and not necessarily have to pay anything, with the 2-year window. But so obviously times change and things of that sort. But yeah, so I think that's kind of rundown on what's going on in the real estate market. I guess we'll jump in here with Russ Williams with Williams Mortgage on what he's kind of seeing in the mortgage rate. So how are we doing, Russ?
Hey, Mark. Welcome to September. Wow, it's going fast. Mortgage rates are up a little bit. They're near the highest levels for the year, but it's not to be unexpected. We talked about this for a while, that the first 3 weeks of September were going to be a little bit woolly, and that rates would move all over the place. Every first Friday of the month, the non-farm payroll report comes out, and it came in pretty strong last Friday, but there were some cracks in that report as far as the new jobs that were created. Next week, Mark, we've got some CPI and PPI numbers, which are measures of inflation. And the following week, we have the Federal Reserve Board meeting to discuss how far they want to increase short-term rates. And again, the media always gets this wrong. When the short-term rates are increased by the Federal Reserve Bank, that actually can improve mortgage rates a little bit. So we could actually see a little bit of moderation in interest rates coming back down as we head into the latter part of September and later on in the fall and winter months. And to your point, CoreLogic just came out actually with appreciation in homes year over year at 15.8%, which is down a little bit because the prior month it was 18.3. So we're still seeing rises in property values, but they're just not increasing as fast as what they were, to your point. Certainly, with interest rates up a little bit, that does affect your buying power. But as we talked about in previous meetings, Mark, buy the house, marry the house, and date the rate. We certainly expect, based upon Fed speak and different things that they've published, that they are going to be very aggressive to try to get inflation under control, to the point that they might even kick us into a formally defined recession. And historically, recessions have driven mortgage rates lower. So, and I know you put some great posts out there on the Champions page to talk about what interest rates have done during recessions, as well as property values. I encourage viewers to look back through that. There's some great information there. But certainly buy the house at today's price, with those home prices continuing to rise, and let's right size that mortgage next year when interest rates are down a little bit. So, great advice.
Yeah, it is. It's just that's what we're here for. Is basically everybody's case, everybody's scenario is different. Champions, our goal is to coach you and educate you through the process of what to expect, and then just your different options. I was talking with a real estate investor, kind of first time investor, and he's like, well, I was told that I have to have 25% down to buy an investment property. That's not true. You can buy it at 15%, 20%, 25, just depending on if you have mortgage insurance, your insurance or your interest rate will be higher as an investor. But if you're planning to refinance that loan in the next year or two, maybe you don't put 25% down, maybe you put 20% down, save that 5% for repairs potentially or upgrades to that house, and then refinance that loan down the road and get a lower price. And then as you increase that and improve that property, your equity goes up, that value goes up, your debt to income ratio or loan to value ratio goes down, you can get a lower rate potentially, and so those are some things that, as an investor and at Champions Real Estate Team, is just, being an investor myself, is just helping and coaching those people through, clients, just what to expect in that process of that. So it's just, there's a lot of stuff out there that we can help you with and just give you that information, whether you should buy a house now, today, tomorrow, next year, in 5 years. How can we get you on the path to home ownership or even real estate investing? So those are some things we love to do here at Champions Real Estate Team. Happy to help you. And we team up and pair up with Russ Williams at Williams Mortgage. Basically, being a mortgage broker, he can shop all the different, he's got many different mortgage companies that he can shop and get you the best rate and say, hey, here's a good option, here's a better option. Does an ARM work for you? A 5-year, 10-year ARM work in this industry, in this environment? So those are all a whole bunch of things that we can dive more into later, but that's just what we like to do here. So, but appreciate everyone watching us. If you have questions, comments, email us, text us, any of the social media platforms, like us, follow us, share us, all that good stuff. And my 2-year-old daughter just says hi. So she just came back from a walk. So hi, honey. How are you? You good? Okay. All right. Well, everybody take care and have a great rest of the week. And we'll talk to you.